All right, today is Thursday, October 22nd, and this is a post-market review for the stock market activities today. We are gonna do things differently this time around. We'll keep it short and sweet because I do have some personal obligations that I have to attend to, so we will only cover the charts, the rotation trade, and we will do a conclusion where we summarize what we've learned and what we are looking forward to in tomorrow's activities. We do have different charts today. We'll cover the SPY, the Qs, dollar index, the VIX, treasury yields, gold, copper for the first time, Peloton, Apple, and Tesla. And here we go. What do we see in the SPY's chart from a 15 minutes perspective? We are still in range. We managed to gap a little higher today, fading out right away, and we had another one of those Nancy pumps. That happens, of course, right around 9 o'clock Pacific or lunchtime Eastern when Nancy comes out and says that she's optimistic about something or she's closer to being close, about being close for being close. And the market would rally based on that news. However, not all the indices acted the same. Not all the indices kept the pump and rallied thereafter. And the notable point here is the activities were bounded by the levels we've identified in the chart. Take a look at the level of the 342.40. Right after the Nancy pump, we blew through it right away, but we went down and we tested the level and it acted as solid support multiple times. And you saw the SPY rallying from that point, going ahead to crack the second resistance level of 343.70, and after cracking that level, you did manage to test it and it rallied all the way toward the end of the day. So all in all, the SPY chart is healthy. It managed to rally from the bottom today and it did it in a technically sound way, breaking resistance levels and then retesting them before marching higher. Nothing wrong with the SPY right here from a 15 minutes perspective. Now, what do we see from a daily perspective? Is the cup and handle formation still intact? Yes, it is. And today we had a confirmation that the pattern is still alive because the SPY managed to close in the green. And as you can see, the daily MACD, which is less significant than the weekly one. However, it is curling back up, trying to make a positive crossing, indicating further upside for the SPY from here. Here is another way to look at the chart. We see a bull flag formation that is supposed to and expected to break to the upside and rally on. Now, let's put things into context. Today, we saw a cyclical rotation from the momentum stocks, aka the stay-at-home stocks, into the laggards, aka the reopening stocks. We will discuss that in details in the rotation trade segment. But why do I bring this up? We had some good earnings from cyclical names and reopening names such as Las Vegas Sands yesterday and Coca-Cola today. So perhaps the market reverted into the rotation trade mentality. However, we've seen the market do this rotation for a day or two, but not build on the rotation action and sustain that action for days or weeks. So was this a one-day wonder for the SPY because we saw financials and industrials and oil rallying? Was this a one-day wonder where we see a green pop and then we reverse again to the downside? It is possible, but for now, the technical look of the chart is bullish, and of course you know that everything is dependent on the outcome of stimulus. So you do have to keep that in mind when you look at the charts and make trading decisions. Moving on to the Qs from a 15 minutes perspective. Right away, you see that the Qs, just like the SPY, had the Nancy pump in the morning. Of course, it gapped up right away as soon as we started trading. However, we saw a flush down right away, a sell-off. The Nancy pump stopped the bleeding here, and the levels that we've identified in the Qs chart worked to the penny. So there is no coincidence when we pick these numbers. Take a look right away, the first circle that I drew on this chart. We saw the flush and the Nancy pump. The Nancy pump came right at the level of support of 280.95, or we can round that up to 281. We bounced from that level, then we hit the resistance level of 283.38. All of these levels, by the way, we've identified for weeks now. So these are not new drawings in the chart. They've been there all along. The chart is just bouncing in the range that we have identified previously. But here we go. You see the chart hitting the resistance of 283.38, reversing from that level and revisiting the support of 281.60, taking support from that level, bouncing higher. Now the 283.38 becomes resistance again, and if we switch to a shorter timeline, you will see the struggle for a little bit to break above the resistance again. But you see it from 15 minutes perspective as one candle blasting higher. And just like the SPY, the technical behavior of the Q's chart from a 15 minutes perspective can be described as technically sound, retesting support levels, picking up support, breaking resistance, going back to revisit and retest support before marching higher. Nothing is wrong here in this chart, but it is notably weaker than the SPY. To illustrate that, let's go to a daily chart and check on the cup and handle formation, and right away you see that the cup and handle formation in the Qs still intact. However, it is a lot weaker than the SPYs. And matter of fact, when we looked at the SPY, we identified a bull flag. In this chart, we can identify a bear flag. So you see the contrast here between the tech sector and the cyclical sectors of the economy working in opposite way, at least in the stock market. This is of course 1 day worth of activities. We're not going to make a big deal out of it. Moving on to the Dixie. And right away you see overnight the chart gap higher, which is not technically healthy for the Dixie chart because it is a continuous chart. So right away you see the chart corrected itself, filled the gap before bouncing and trading higher. Yet the Dixie didn't make it all the way to the 93 level, which is a very pivotal point. It acted as support many times before, and it should act as resistance before being recaptured as support again. At least this is the healthy way for the dollar index bulls. And what happens when we see the dollar index firming? Let's switch to the chart of copper that we are covering for the first time. Right away you see copper reversing, and this is the futures chart. So the new session already started and it's not looking good so far for copper. Copper celebrated early upon the first hand of the dollar's decline, and now you see it stopping the early party, reversing, and perhaps trending downward tomorrow if we see the dollar index firming yet again. And by the way, this is a trend line that has been going on for a while in the copper index, and if we do break it, you will see declines in copper, and that will coincide hand in hand with the dollar index. The correlation between the dollar index and copper remains healthy the last 2 days. Dollar index goes down, copper goes up, but we are still seeing divergences here and contradictions between the dollar index, gold, copper, oil, yields, the VIX, and the indices. And all we're trying to do here is sort them out and see which chart is telling the truth regarding the stimulus. So with that, let's move on to gold and see what gold is doing. Remember that gold was not celebrating to the same degree that copper did upon the decline of the US dollar yesterday. And of course, along with copper, you see gold reversing upon the first hand of the US dollar firming. And from the chart, you see that the pivotal point of 1925 remains a very strong resistance against gold. Moving on to the VIX. The VIX today closing in the red and reversing from the highs because we did see a rally in certain sectors such as oil and financials, and that kept the SPY rallying. Of course, the VIX tracks the put options activities against the SPY, and when you see sectors such as cyclicals, financials, and energy rallying, you're not going to see the SPY declining even though technology underperformed. Another piece of the puzzle to add. Now let's do another one. Here is the chart of yields, the 10-year Treasury yields, the TNX, and right away you see the ABC pattern, the bullish pattern, playing aggressively to the upside. And as yields rise, you see the banking sector trading in the green, specifically regional banks, which are more tied to the Treasury yields. Again, keep this in mind. Treasury yields up, gold and copper retreating, the dollar index firming, the VIX reversing to the red. All of these divergences will get sorted out, but you have to keep them in mind right now. We'll talk a little more about the divergences in the conclusion of the video. But for now, we're moving along to the chart of Peloton. This is a weekly chart, and this is what we talked about yesterday. We said, is this red candle a fake? Just like the one we saw back in July. And so far, it is not looking like a fake candle. Matter of fact, the sentiment is changing against the name. You saw Goldman Sachs downgrading today, and the options market activities, interestingly enough, were bidding against Peloton, buying more puts than calls for the first time in a long time. Very notable here. We did not see this kind of options market activities back during the red candle in July. Keep that in mind. And now let's check on a 15 minutes chart for Peloton. Right away, the chart gapped down severely in the morning, down 3 to 4%. But you saw the Robin Hoodiots checking their tickers, and they noticed that, oh, Peloton is down, let's do a Naruto run. And they dive in heads first, asking questions later, and they buy Peloton, pushing it all the way to the green. But what do you know? The sentiment has changed in this name, and the savvy investors who've been holding this name and made a killing are starting to dump. And they dumped right on top of the heads of the Robin Hoodiots who ran Naruto style first thing in the morning. And you saw the name declining throughout the day and having a very bad close by the end of the day. I expect a continuation in the decline and change of sentiment in Peloton. And by the way, it's not just Peloton. All the momentum names, the white hot names, the DocuSigns, the Zooms of the world, even Tesla reversed today, because you're seeing a massive change in sentiment. And this change of sentiment for momentum and hot stocks into cyclicals, boring, lagging, reopening stocks is happening, and it's being amplified by good results from names like Las Vegas Sands, Whirlpool, AT&T, Coca-Cola. You're seeing that these companies are now turning the tide against the virus and figuring out a way how to operate efficiently in this given environment. But again, we've seen this rotation happen before for a day or two before pausing. So it is important whether we're going to see a continuation of the rotation or not. We'll talk a little more about that in a little bit. But we do have the chart of Apple to cover here. Here is Apple from a 15 minutes perspective. Starting that right away, gapping up, yet flushing down immediately, selling off the pop in the morning, and nothing could help Apple to climb back to the support, now resistance of 117. And the name managed to close below 117 by the end of the day. That is very notable, and it leaves the next support of 113 on target right now. Apple not looking so good. You saw the chart of the Qs and the SPY and other names recovering after the Nancy pump before lunchtime. That did not happen to Apple. Very notable. Furthermore, let's add some drawings to this chart right here, and right away you see a bear flag formation in Apple's chart, indicating further downside to come. And when we switch to a weekly chart, here is the mother of all bear flags, and it is being played out. Again, if you are betting on a cup and handle formation for the Qs, you have to remember, can the Qs rally without Apple? Not possible. Absolutely not possible. If Apple declines, so will the Qs and the entire tech sector. And the weekly chart here, the bigger, or the longer rather, and more important chart than the daily and the 15 minutes is the weekly. And the weekly is telling you that we are seeing significant weakness in Apple here. Moving along to the last chart of the day of Tesla. 15 minutes chart. Tesla reported earnings yesterday. You saw the pop, and I told you in yesterday's video that I don't expect the pop to last. Matter of fact, I wouldn't be surprised if we see selling in Tesla in the morning. And right away, you saw the flush down immediately. We saw a pop higher, 4% or so, and that was sold out right away. And I used that opportunity to add to my put options. I held them through earnings, the decline in value, the moment Tesla opened for trading in the morning. But this is the beauty of averaging down. Tesla gave me an opportunity to average my puts down, and now by the end of the day these puts are back again trading in the green. But the notable point here from a 15 minutes perspective is the accuracy of the support and resistance levels that I've identified right away. And if we switch to a shorter, say the 5 or the 1 minute chart, you will see the first thing in the morning, the level of 438.50 acted as support for just a little bit, and then we saw it acting as resistance before we slid back to the level of 434, which acted as support for a little bit before we broke that and we reached the last level of support, significant support here of 425.30. And I warned you before, Tesla better hold 425.30 because breaking this level will mean a flush to the downside. And you saw how from the first circle that I'm drawing, or I drew on the chart that you're looking at, that the level of 425.30 acted as support, solid support, and Tesla managed to rally all the way to 434, which became resistance now, and it failed to break above it. Gave it another shot, and that was the second failure, and your indication to go short on Tesla. That was a confirmation of the rejection from the resistance line of 434. And you see the chart flushing down all the way, reaching the support yet again of 425.30. Will it hold tomorrow? If it doesn't, you will see further downside for the name here. Now, I know that the analysts and clowns on televisions, the likes of Jim Cramer, they've been licking the boot of Elon and Tesla all day long. Never mind the fact that Tesla is only profitable due to the regulatory credits. They're not making any profits on any of the cars they're selling. This is a car company after all. Their main product is the vehicle, and the entry price for that vehicle exceeds 30 grand. Everything else, the software and the autopilot, comes after you purchase the entry to the vehicle. And when you compare Apple to Tesla, you can't even start to make that comparison because the entry price for an iPhone is $1,000. The entry price for a Tesla vehicle is over 30 grand. So again, the multiple is out of whack here. It's a $400 billion car company. We saw this mania happens in 1999 with Qualcomm, and they gave us all the arguments that they're giving for Tesla back then for Qualcomm. And we all know how that movie ended. Tesla remains a growth company, but it is not anywhere near a $400 billion valuation. Furthermore, as we see the margin calls flooding the Robin Hoodiots, they will have to resort to some of their profitable names that they hold, and the number one name that comes in mind is Tesla. They've been holding this name for a long time, and some of them are making a killing. Now they have to meet the margin requirement, so they have to sell some of the shares in the stocks that are profitable in their portfolio. Tesla is the number one stock to be sold to raise cash to meet margin calls. You gotta keep that in mind. Furthermore, when we switch to a weekly chart, we see a big bear flag formation just like we saw in Apple. Of course, we have to wait. We still have 1 day left for the week for the weekly chart to be complete. But it's not looking good for Tesla here. It is a bear flag formation. There is an exhaustion in the momentum in Tesla. And if you are looking to raise cash to weather the storm of the election's volatility or margin calls, or whatever reason it is to raise cash, Tesla is the number one name to do that. And you will see the name declining further. That is my thesis, and I remain bearish on the name. Moving on to the rotation trade analysis, and right away you see that the comeback stocks, aka the reopening stocks, outperformed significantly today. And it is very evident when you look at the action today. Traders and investors sold momentum names, specifically tech names, to raise cash and rotate that cash to some cyclical names. And you saw earnings from Southwest today. Southwest did very good, so did Coca-Cola. General Motors now becoming a momentum name due to their AV mission and the release of the new Hummer. And across the board, you see the Cheesecake Factory, MGM on the heels of Las Vegas Sands earnings yesterday, Royal Caribbean, Marriott having a big day today. This is a classic rotation day, using the hot technology names as an ATM to raise cash and rotate it to lagging names. And now let's move on to conclude this video. We are still waiting for the outcome of the stimulus talks, but we're also playing the chess game of who is telling the truth. Today, the dollar index firmed up a little bit, yet the VIX closing in the red. Gold and copper fading and reversing the gains from yesterday. Oil having a green day. Stocks are mixed, but green overall. And treasury yields blasting higher, outperforming everything else to the upside. So what do we make here from these divergences? The kings here. In Team A, the dollar index. In Team B, treasury yields. These are the most reliable names you have to take in consideration because gold oil, copper, stocks, even the VIX have other exogenous factors to determine their prices. The dollar index had a big decline the last few days. However, today it firmed up, signaling that there is uncertainty in the stimulus talks, and yesterday's optimism about the talks is turning a little darker today, and the hopes are fading because, as you might have heard, even if Nancy and Mnuchin reach a deal, the deal will not be signed in Congress, specifically the Senate, due to a disagreement between GOP members. Yet on the other hand, Treasury yields been consistent and rallying day after day, signaling that we will have a deal of some sort because the American people need a deal immediately, even if it is a partial deal of $1,200 checks going to individual Americans. That could happen before the election. Maybe there will be a compromise after all, and they will take a partial deal. This is at least what Treasury yields are telling me. But again, the divergences and the confusion remains, and we cannot make a solid conclusion here one way or the other. We can only watch specifically for these two names, the dollar index and the TNX. Let's say tomorrow we have a big reversal in the TNX and we see the dollar index firming and rallying higher. Right away before the day even starts, before trading even starts, you will know what to do, because a rally in the dollar index and decline in Treasury yields in this given environment will mean a red day for stocks. What happens if you wake up in the morning and you see the opposite picture? The dollar index collapsing further and Treasury yields continuing to climb higher. That will further solidify that there is upside for stocks, and the cup and handle formation, at least in the SPY, would take place to the upside. Lastly, let's look at the earnings schedule. We do have American Express tomorrow. American Express rallied over 3% today, so I expect the name to give up some of those gains tomorrow unless it has very solid earnings to show. And you are aware, of course, that we did have Coca-Cola, AT&T, American Airlines, Southwest, and Intel reporting today. Unfortunately, due to my obligations, this video has to be shorter and we will not cover any earnings today, but tomorrow I will make it up for you. I will cover all the earnings from Thursday plus American Express, and I will recover anything we missed in the options market, activities, and of course in the news. The last thing before I log off, we do have a presidential debate happening in a little bit, an hour or so from the time of the recording of this video. So hopefully this time around the debate will be a lot better and we will hear some economic policies from the candidates. And of course what they say about stimulus will have an impact on the futures right away. So all eyes on the final presidential debate today. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.